Hey friends, welcome back to the channel. Today we are going to understand a very important topic, how ETF prices are determined. Many people think ETF works exactly like a stock, but in reality, there are some unique mechanisms behind ETF pricing. Let's break it down step by step with simple examples. What is an ETF price? ETF price in the stock market is called the market price. It's the price at which you and I can buy or sell ETF units on the exchange, just like a stock. But behind the scenes, every ETF has something called net asset value, NAV. For example, suppose you are buying NiftyBees ETF. Its NAV today is 220 rupees. But in the stock market, it's trading at 221 rupees and 50 paise. Why is there a difference? That's where ETF pricing comes in. What is a NAV, net asset value, of an ETF? NAV represents the actual value of the basket of securities that the ETF holds. It is calculated by NAV is equal to total value of underlying securities minus expenses divided by total units outstanding. For example, if NiftyBees ETF has holdings worth 22,000 crore rupees and there are 100 crore ETF units, then NAV is equal to 22,000 divided by 100 is equal to 220 rupee per unit. Why market price not equal to NAV? On the exchange, ETFs are traded based on demand and supply. Sometimes, market price goes slightly above, premium, or below, discount compared to NAV. For example, if more buyers are rushing to buy NiftyBees, the price may rise to 222 rupees, premium. If sellers are more, price may fall to 218 rupees, discount. The role of market makers and ARBs, authorized participants. To keep ETF prices close to NAV, authorized participants, ARBs, and market makers play a big role. They use a process called arbitrage. For example, if ETF price is equal to 225 rupee but NAV is equal to 220 rupees, ARBs will sell ETF units in the market and buy underlying stocks. If ETF price is equal to 215 rupee but NAV is equal to 220 rupees, ARBs will buy ETF units in the market and redeem them for stocks. This ensures ETF prices don't deviate too much from NAV. Intraday indicative NAV, INAV. Unlike mutual funds, which publish NAV only once at day end, ETFs provide real-time INAV during market hours. This helps traders and investors know the fair value of ETF at any given moment. So friends, ETF prices are determined by three things. NAV, actual value of the basket. Demand and supply in the stock market. Arbitrage by market makers to keep prices close to NAV. That's why sometimes you'll see a small difference between ETF market price and NAV. It's totally normal. Let's take final example. NiftyBees NAV today is equal to 220 rupees. Market price is equal to 221 rupees and 50 paise. Premium is equal to 1 rupee and 50 paise or 0.68%. This small difference is common. But if you see a big gap, it means low liquidity or inefficient arbitrage. Now you know how ETF prices are determined. If you like this explanation, don't forget to like, share, and subscribe for more investing content. And tell me in comments which ETF are you holding right now.